In today's show, you'll hear investor perspectives on the COVID-19 impact on startup fundraising. This is Investor Perspectives. I'm the host of Investor Connect, Hall T. Martin, where we connect startups and investors for funding. It's the time of COVID-19. We're in lockdown looking to reopen the economy in the U.S. The virus has changed the way the world looks with empty streets, shuttered stores, and death counts rising. There are signs of flattening the curve, so we now look to the other side when the economy will reopen. I hope you enjoy this episode. Our first guest is Ash Kularachi, who runs StartEd in New York. Ash was previously on the Investor Connect show. What new investment thesis will the COVID-19 pandemic give us in the edtech space? What would be the changes to what they're investing in now afterwards compared to what they did before?
Yeah, great question. I've seen tons of venture funds and investors who don't traditionally focus on edtech now hiring edtech partners, right? I've seen TCs shift at a lot of venture capital firms to include workforce learning and the future of work, as well as traditional edtech solutions. And my guess is that the folks who have been investing in the space for quite some time will need to provide some guidance on what the current theses are, right? So it's not so much that new theses will be created. I think current theses will have new markets created, and those who have been working in it for some time will be at a benefit to teach other investors who are approaching it. So things like obviously learning and working from home are going to get a decent bump. I think also that the spending power of B2C users versus B2B users will change as well. I think there'll be a significant shift in how those two markets grow respectively. And that's subjective to the specific B2B or B2C market you're tackling. And as a result, investors who traditionally focused on enterprise sales as investment thesis, or focused on marketplaces, or focused on a particular industry vertical will see their scope increase, if anything.
Very good. Yes, thanks so much for that. And then the last question, and then I had one more, is what startup sectors will be diminished or eliminated by COVID-19?
Yeah, and I certainly have seen quite a few sectors have funding and customers completely dry up. I suspect that edtech as a whole will probably see tremendous growth from this, almost a step function of growth, most likely once we get out of the eventual recession that COVID-19 will create. But I think it's also important to mention that we haven't entered a new normal yet. So after every single crisis that we've seen in the last couple of decades, whether it be the dot-com bubble, the financial crisis, large companies were created out of those crises. The last one created all the sharing economy companies that we see today, like Uber and Airbnb. A similar thing will happen after COVID. I suspect that edtech as a whole, i.e. the replacement of traditional learning or the enhancement of traditional legacy providers, is going to be something that grows significantly. I suspect that tools focus on working from home, as well as improving the environment by which you work in and also manage your team virtually will see growth. I see that any business that doesn't recognize that most users, most learners and teachers will see significant de-urbanization after COVID will probably suffer. And obviously the sectors that require in-person interaction will likely take a hit as well. For example, industries that gather people such as event planners and in-person schooling.
Do you see big tech getting into edtech in a bigger way, making partnerships with universities and providing content through their platforms?
We've already seen some make moves to do so. I think Cisco bought Blue Jeans, the video conferencing technology, recently to compete with Zoom. I know that companies like Google and Facebook are increasing their video-based chat functionalities. Just because Zoom just happened to be in the right place at the right time, their users went from 10 million to 300 million in blink of an eye. I suspect that the big tech players will try to take a portion of that video-based communication market that suddenly grew exponentially, but it'll probably take a few months for them to catch up with the growth that Zoom has experienced.
next guest is Charles Sidman, managing partner of ECS Partners and founder of the Maine Angels. So what are you doing to prepare for the market after the lockdown? When we come back out of it, what are you looking to do at the next stage? Are you digging in and trying to get a good valuation on that next round, or are you going to be stepping back and seeing what transpires afterwards?
I am seeing no shortage of exciting investment opportunities now. So I am fully engaged. If I'm doing anything differently today, it's really working hard on my network, both of deal flow and co-investor opportunities, because they're going to be even more valuable. We're investing now and we're going to reap the rewards afterwards.
And so you're just doing deal flow as always and digging in. Are you looking at the same sectors and same markets you did before, or are you looking after new areas and new opportunities that you haven't looked at before?
I haven't changed sector interests very much. Old dog, hard to do new tricks, but at least half of what I've done for my whole investing career has been in the broadly writ, the healthcare space, and that isn't going away. And it's, energy, material, sustainability. Those are also biggies for me. And again, those aren't going away. The same pressures and needs are there. So I haven't adjusted my sector activity very much. I'm just doing as much as I can cram into every 24-hour period.
What new investment thesis will the COVID-19 pandemic give us? Obviously, it sped up or accelerated certain things already going on, and we're seeing that it continues to speed up. But what new investment theses do you think will come out of it?
Well, I mentioned a couple, before. The individualized medicine, I think, is going to be ever more important. It was important even before this virus problem. That's just going to gain speed and urgency. And the communication and interaction stuff. Now, both of those have some downsides as well. In the 5P personalized medicine formula, the last P is privacy. And I think we haven't come to grips with that yet. We want to know everything about everybody. And there's going to be some problems and there's going to be some pushback on that. Same deal with maybe it's the same thing of as we interact and move around, not everybody is ready to be integrated, to be a bee in the greater hive, so to speak. So I think we've got some social issues that, just like old social issues of diversity and economic disparities, et cetera, this is a new dimension, which we haven't talked much about. The techies just sort of assume that it's the way everything has to go and everybody will be delighted to do that. I don't think that's going to be the case.
You think there's going to be a pushback against the encroachment of tech? When it's giving you a new job, that's great. When it takes your job away, it's not so great.
And when it wants to know where you are every second, what you're doing, the pluses, the minuses, how you're affecting everybody else and being affected by them, I just don't, different cultures around the world have different sort of norms and values about that. I don't think it's a given that we're all going to adjust and adopt gracefully to becoming cogs in a greater machine for everybody, for each other's good.
So what startup sectors will be diminished or eliminated by COVID-19? It's certainly hard in the lockdown stages to go to a game or do whatever. And I wonder if they're going to try and find a way to move some of that online, at least part of the spectator sport, like esports. Everything in esports is online. And in these lockdown times, esports is taking off because people have more time to engage with them as users. And just wondered if the physical sports, NBA, football, and so forth, are going to try and move some of their work into the virtual world or the esports world.
I would expect that unless we handle the vaccine, achieve the vaccine. The problem is there are some diseases where, despite all of medical science, we have not got an effective vaccine. So, it's not a given that we're going to get one. We all hope we do.
Right. And it seems like certain sectors are really accelerating, such as supply chain, delivery to the home, healthcare moving to the home. Those things seem to be speeding up. And I wonder what gets taken down by that. And certainly physical events and things that require physical presence makes it very hard. And then some industries, like travel, are probably in for a permanent reduction, but not elimination, I guess.
Right. Well, again, like delivery to the home, there are some people who are very happy with that. And so it's growing because it didn't exist a while ago. Anything from zero is growing. I don't see it as taking over because you want to look at the different, cheeses or yogurts or wines and decide. You don't necessarily know what you want. So I think that's a further differentiation or diversification opportunity there. I don't see all of us going one way and abandoning the other.
What else should we cover that we haven't? What other thoughts do you have about COVID-19 that you would like to share?
Well, my biggest one that I'm often raising with people is we're not going back to the old normal anytime soon. People want, and our leaders desperately want, a quarter from now, they want to be back in the old days. It really is going to be much more drawn out and painful than that. And there's some things we can see that we in this country have 20 or 25 million people who are now unemployed. All the job creation of the last 10 years is not going to snap back instantly. And then you've got the health things. Even if we would achieve some level of herd immunity, we don't know how long it's going to last. We don't know how much we have to keep testing, how much we have to keep making a new vaccine every season, like the flu. I just see we're in for a long haul, and most people don't want to think that way, or they don't want to hear it.
It takes a while to move people around. It seems like instead of delivering food from the kitchen to the dining room table in a restaurant, they're going to be moving it from the kitchen to your curbside delivery service. And it takes a while to reorient the supply chain, the packaging and the systems and the training. And then people that used to work in some industries will be moving now into delivery and others that are gaining great speed. So it takes some time to readjust to all of that for sure.
Well, we also have to remember that, some people are fortunate enough that they can afford to, have the dinner cooked somewhere else and delivered. If you're on a subsistence or a very limited budget and diet, you can't afford that stuff. That's only for the fortunate few. How do the bulk of people get by? So I don't think this is going to be our mainstay here.
My next guest is Brett Noyes, founder and manager of Unbanked Ventures. And so, what new investment thesis will the COVID-19 pandemic give us?
Yeah, so there's kind of two thoughts on that, right? A lot of people think it's going to change everything. Some people think it's going to change nothing. Generally speaking, things, are generally in the middle. I think that in general, more people are going to be allowed to work from home. I think a lot of companies are going to really rethink how many days, how much of their workforce really needs to be in the office. So I think that's going to be there's just going to be a fundamental change probably in how business is done. I think we're all learning that there's a lot of things that we could do via video conferencing versus having to be in person. But I think we're also learning the value of when we are available to do either in-person meetings, like getting more out of those. So I think that'll be kind of I just think that there'll be a lot of theses that will be more focused on, how do we change the workforce? Obviously there'll be a lot of changes in healthcare, but that's just not an area that we know a lot about.
Very good. And so last question is, what startup sectors will be diminished or eliminated by COVID-19?
I looked through everything that they have listed as kind of a startup sector. And honestly, I went through it and I said, I don't think that any of these are going to be, they might be diminished in the short term. There's probably some things that'll be eliminated. But really what I see is there's an opportunity, right? Everybody that's focused on those things are thinking about the future innovation and automation of things that already exist. So when I think about this, I think that more likely what we're going to see is the diminution in the brick and mortar. And those guys are going to be hit hard. And the companies that are not thinking about the future are going to be hit hard. And the startup sectors that are solving the problems and creating the workforce of the future and the companies of the future will do well.
Now we come to Daniel Ebry, co-founder and managing partner at Mindset Ventures. What new investment thesis do you think COVID-19 pandemic is going to give us? What new areas of interest do you think will be on the other side there?
So I think there's areas that are really being highlighted and getting stronger because of this crisis. So healthcare is an obvious one, right? And all the decision supports in healthcare, how you use data and how to, put science into healthcare to enable us to live better or go through similar crises like this one. I think, of course, remote work, it's amazing what's happening to companies like Zoom and others. And I think these collaborative, tools will be even more enhanced. I also see a big trend in gaming. And that's interesting. It's one of the industries that we don't invest in because, to be honest, I don't think we know enough. But it's an industry that is really booming now because of the crisis and everyone staying home. And, streaming and food delivery and, ghost kitchens and all these things will be interesting. So I think the vast majority of the population is realizing that the physical assets or the physical goods are not that much needed once you have to stay at home. So you see news every day of I just read one yesterday of high society women that have 150 shoe pairs in her closet. And she's depressed because she can only wear sandals inside her home because she cannot go outside, right? So how do you value these types of things in your life and assets and the need to have an office where you can be productive remotely? So I think there will be a major paradigm shift. It's not only about technology, but it's about, I think, how we live and behave as a society.
I've seen a number of new funds pop up in the last week or two called pandemic funds. And obviously they're putting together capital and going after immediate opportunities that they see out there now, whether it be buying distressed assets or be investing in new technologies that are, seeing a lot of traction. What do you think the long-term success of those funds will be?
I don't like that thesis that much. How I think, it's kind of opportunistic in the short term. This crisis is very interesting in sense that it grew very, very fast and spread fast like no other. And as you can see now, the market's starting to open up. If you put that over time, we're talking about, 3, 4, 5, 6 months, right? So it's really short. So I really like supporting companies that are trying to face and help us fight COVID. But on the other hand, I think it is very opportunistic and short-sighted. If you're looking about distress, I think there's a great opportunity there. But of course, you should look distress more broadly, not only this crisis, but how you can do a longer-term fund that could benefit from other crises that we'll probably have in the near future.
What startup sectors will be diminished or eliminated by COVID-19? What do you think is going to just drop off our radar and not get much interest anymore?
I think in general terms, everything that requires us to do physical or offline interaction. So we saw lots of startups that do, online things or apps, but require us to interact physically. I think this will be diminished somehow. Or, for instance, there are new models of education that were being created that it's somehow a mix of e-learning and physical learning through computer, etc. I don't think that's going to work anymore. And also anything that's, highly cash burn and just, marketing and trying just to get audience and something like that. I don't see a big value in that. I see value in social networks in terms of connecting people, but not in just pushing marketing to everyone, just trying to grow.
Seems like physical events and, physical and travel and those things are going to be greatly diminished. And therefore the startups that go around them will be diminished as well. And we're seeing tremendous contraction, 20, 30, 40% in some of those sectors at least. And for the long haul, not just short term, but for the duration. And so it seems like startups are going to be shifting out of those sectors into something else. There's a big push for retail tech, but it seems like retail is on its way out with the bankruptcy of so many retail firms, unless they come back with something related to experiences or some whole new category. Traditional retail tech seems to be dead at this point, but maybe there's other ways that it will come back in a new form.
Yeah, I agree. I think retail is one of the areas that we never liked that much. I think, retail needs technology, but, at the end of the day, it will all be shifting to e-commerce or some sort of e-commerce. So, and, as you said, this crisis really attenuates that. The travel industry, I think it's a very interesting case because on one hand, that's for sure we are seeing a diminution. Nobody can travel now anymore in the short term, especially internationally. But on the other hand, you see that, people still want to, go to different places and get vacations. And as you diminish your willingness to get involved with more people, get on a longer flights, etc., we'll have to find new ways to meet new places, right? To discover. So I think the travel impact is relative. For instance, if I was Airbnb, I could see tons of good opportunities for Airbnb, right? How can you define travel and experience out of home in your vacations without needing to go too far with hundreds of people in a plane, right? So new models for that, I see a big potential. But traditional travels, hotel booking and flight booking, etc., I think it's not a good place to be.
I agree. I think we'll see a whole new range of new technologies and investment thesis coming up around automation, robotics, AI, manufacturing, flexible manufacturing. I think the careabouts will change going forward just because people's time and attention will be driven elsewhere from what it was before. And maybe more serious too, in some sense, because people's lives are depending on some of this stuff like ventilators and PPE. But and then impact investing, I think, will come to the fore as well. Do you see much in the direction of impact investing coming up?
We see, and also being based in Brazil, this is a thing that always we got questioned, especially by offshore investors that want to see Brazil in some kind of an impact angle. And I'm really hoping this will happen because I'm a big enthusiast of impact investing. I've been studying this for quite some time. I still think it's really challenging to do that in most of the countries. But I'm really hoping that, we can add more purpose to the investment side in general.
Next up is Lydia Kincaid, Managing Director at IIM. What new investment thesis will the COVID-19 pandemic give us?
This is another great question. We believe that there will be more widespread interest in rapid diagnostics, traceability, and technologies that can enhance efficiency, especially related to the industries that we focus on, which are agriculture, animal health, and human health. The pandemic has highlighted the shortcomings of our current food production and healthcare systems, which means solutions are needed in order for us to adjust to the post-pandemic world and for us to be better prepared for the next major disruption. Within agriculture, food production and distribution is under massive strain right now. So those stakeholders need innovation that will enable them not only to recover, but to secure the sustainability of their businesses long term. Labor shortage is no new problem for agriculture and animal health, and now all of a sudden it's an even bigger problem. I think we will see even more startups developing ways for those businesses to operate seamlessly and potentially with more automation in order to reduce the need for close contact with others.
And then what startup sectors will be diminished or eliminated by COVID-19? What's going to go away and just not come back?
Well, of course, a lot of consumer-facing startups have been devastated by this sudden drastic change in consumer spending. Not that they won't bounce back, but I think it's going to be difficult for them. Any companies related to travel or the auto industry are at a standstill. And I also don't think those are gone forever. Obviously, the entire shared economy is being hit hard, and I don't think they will find relief anytime soon. I think those sectors are really going to struggle for a pretty long time. Anything related to office space or co-working will probably look vastly different moving forward. Even generally speaking, SaaS startups that may be doing okay now due to longer term contracts may find themselves struggling when it comes time for renewals and their customer has to decide between signing a new contract or purchasing a new piece of equipment that they need for their business due to financial pressures. I don't think we'll see nearly as many companies in the nice to have categories. So some sort of add-on to an existing product or a luxury service that has a very narrow customer base. Within the retail and restaurant space, this sudden need for e-commerce solutions has in many ways accelerated the adoption of new technology, but businesses that have not been able to pivot will have a very difficult time staying alive. Overall, I think the startups that make it will be those that are solving real pain points and that are creating lasting solutions.
So what do you think the impact will be on the diligence process that investors run based on COVID-19?
Well, one of our pieces of due diligence that we're taking a really close look at is risk factors. I was talking with our IIM counsel, Philip Krause, about this, and he has a blog post related to this topic as well. We're looking specifically at how we assess various risk factors and what sort of disclosures we expect from a company. Typically, disclosure language is super boilerplate, but I would encourage investors to expand their set of diligence questions based on what we've learned so far in the pandemic. So Some of the items that we're thinking about even more closely now include supply chain issues. So is the company's supply chain secure or at risk for disruption? And does it have built-in redundancies? Related to customers, how stable and sustainable is their customer base? Their connection to the stock market? How are they affected in the event of significant stock market variations or dramatic fluctuations in interest rates? Looking at their actual technology, is their existing technology robust enough to facilitate significant numbers of employees working remotely? Taking a closer look at redundancy, have they established succession planning and redundancy for key employees? And finally, looking at cash flow, are they adequately capitalized to weather significant short-term disruptions in cash flow? Of course, this list could go on, and we will probably continue to add to this list. But I believe that the entrepreneurs who have risk mitigation plans in place will have a greater probability of success, and the investors who pay close attention to these risk factors will make smarter investment decisions.
Here is Nathan McDonald of the Keiretsu Forum. Great. Well, what new investment thesis will the COVID-19 pandemic give us?
Well, it's definitely eliminated some theses in terms of, accelerating the end of retail and, companies with a lot of debt and a lot of overhead and pretty thin margins. Unfortunately, Amazon continues to eat large portions of our economy, which is a big benefit for us here in Seattle, them hiring another 75,000 workers. Microsoft's done tremendous, Apple. So I think, again, it's going to continue to accelerate the difference between the old line economy and the new line economy. And if folks are not investing in technology, they're not investing in the future. They're not investing in the growth areas. So I think it's going to even further accelerate the asset allocation towards technology, towards blockchain, towards fintech. We've obviously seen there's some major challenges in our healthcare system in terms of the way it's set up. And the capacity and the ability to scale capacity and provide treatments needs to be radically updated and coordinated in a much more fundamental way. So, there's not necessarily brand new theses, but I think definitely the chips have moved around the table pretty dramatically. And the fact that this kind of disruption can impact this quickly is something not many people would have thought 6 months ago was likely. But, it's going to continue to be a new world here. And we really see the advancement in crypto and blockchain and fintech and a lot of those technologies that are going to become more mainstream and become more utilized by governments and by large companies to authenticate and to provide services that are much more, from a risk management point of view, much more manageable than what's been done to date and what's been set up to date. So that would be kind of the new investment thesis, is just that I think there's going to be a dramatic acceleration. And the way things have been done, like the way that your identity has been authenticated, is just going to change. It's going to be different. The way that you access your accounts, the way that you interact with your capital and your investments, it's going to change. And so the companies that are building things to support that are the ones that, we want to bet on for the future.
Great. Well, you talked about retail going away or diminishing. What other startup sectors do you think are going to be diminished or eliminated by COVID-19?
Well, it always depends on the entrepreneurs and their ability to pivot and to make something out of it. So, those that are still bogged down by legacy assets and legacy debt are going to have the toughest time adapting. It's kind of when you're in business school and you see the different growth curves and things, it's pretty well documented kind of what the other end of the curve looks like as things are getting old in the tooth and, need innovation in order to, continue to thrive and be successful. So, it's, I think home building is one area, housing, the idea of housing and having a house is one area that I think is due for some radical transformation in terms of the way people look at ownership and housing and the new generations and what they think about in terms of that type of investment and whether that was something they really want to do, or that completely changes into more of a shared economy type of thing. In some ways, the whole wealth management industry, I think is due for a radical overhaul, and not much talent going into that industry these days that I see. So I think there's a big opportunity to really change that up. Retails have always been tough investments, restaurants and those types of things. I mean, there's never anything easy about making those kind of investments. So, I don't think that necessarily changes or goes away. People still got to eat. And to create a great experience, you can get that service revenue. But from an investment point of view, I think those will continue to be tougher. So, we'll see. We're definitely focused on the areas where we think we can see growth and not as much on the areas where we can't short the private market in those types of ways. So it's just not something we think about too often. But there's definitely a lot of things our investors are not interested in anymore. And then their target around, what they're willing to fund, that bar has been raised. So for those that qualify, great. For those making the next Me Too dating app, just isn't that important anymore. So I think that's good. I think capital should flow to the entrepreneurs that are the most creative and the most qualified. And there's a lot of Me Tooism in the marketplace that I don't think creates a lot of value.
Seems like a dramatic shift for some areas like co-working, where you're sharing desks and chairs, and now it's not something you want to do in any form or fashion. And so it seems like those industries are going to change more quickly and more radically.
Yeah, automation. I mean, some areas of the economy we don't generally pay a lot of attention to in terms of the food supply, packing houses, and these people are in close quarters, and that's just not going to, those facilities are going to have to be dramatically rebuilt and redone in ways that provide more safety and security for those workers, or automated, with robotics and those types of things. Yeah, the shared co-working space, that's, an interesting, saga with WeWork and everything they've gone through and the cycle. And now this, honestly, I'm surprised they've held up as well as they have in terms of, continuing on. So we'll have to see how that one ends up. But, the idea of shared work or co-working, I mean, that's still a good idea. It's just hard to figure out how to be real profitable doing it unless you own the real estate itself. So, different versions of that. I mean, there's going to be much more of a drive to remote workforce. The traffic's been fantastic in Seattle for the last month, and definitely makes it a higher quality of living to be able to get around the city. Microsoft and Amazon just both extended their work from home allowances through October. So, I think there'll be much more variability in that going forward. And that'll be interesting to see how that impacts real estate values in the core in New York, in Seattle, in LA, and other places. And that's definitely an area where there could be a big time bomb ready to blow up as those assets go out of covenant, and how the lenders resolve those situations if there's a significant revaluation of those assets. But the Fed has certainly stepped in to print money and extend loans and buy any toxic assets unlimited. So it seems like there'll be liquidity to take care of those situations, whether we hear about it or not. It doesn't seem like it's going to blow up. So that's at least encouraging, as those of us who would stand to get hit by the collateral damage, we can hopefully continue on to do what we do.
It seems like one of the impacts is it makes people much more acceptable of technologies. I remember 6 months ago, AI and robotics, they were coming to take your job, be very afraid. Now we need, a secure supply chain, and quarantine workers aren't going to be able to do anything. And automation, robotics, now come at with a different light. We need those things, and there's critical assets that we need to get in place. And so how do you think it's going to change the perceptions of workers and other people on technology in general?
Well, we got some big questions to answer as a society here on exactly that question. There's a lot of people that can continue to be left behind, and a lot of jobs that can be eliminated. And that's created some real valid concerns. And, the concentration of wealth is an issue, and it's going to come to a head sooner than later. So hopefully this situation gives us all an opportunity to pause and really appreciate the frontline workers, appreciate the supply chain workers, and all the folks out there that are having to work. They are essential businesses. And yet, in a lot of ways, they're not essential, workers in terms of the way that we value them. So I do think there needs to be a recalibration of that and a more equitable, response in light of, the amount of work they've had to put in and risks they've had to take. And so we'll see how that works itself out and how AI continues to implement itself in the marketplace. It seems to be coming pretty quickly, but I know they're cognizant of the impact of labor, in the transportation industry and in the other areas where it can have a dramatic employment impact effect, and making sure that that's not something that is a huge displacement. And there'll be regulations and things around that. But as the globalization curve has flattened here, and the ability to source goods and services internationally now becomes so much higher risk, that is going to bring manufacturing back here to the United States. And the Made in America, mantra, we already had a trade war. Now we've got this, who knows what's next. but it's definitely become more risky to source your labor overseas. So creating that local demand and the entrepreneurs here to be able to build and create more factories and capacities for testing supplies, for all the things that we may need, is a really important strategic thing. And I think hopefully that more than, hopefully in collaboration with technology, we can help build that capacity in a way that helps benefit everybody.
Great. We appreciate you taking time to talk today. In the last few minutes that we have here, what else should we cover that we haven't?
No, I appreciate you having me on, and it's always great to have the investor perspectives come out. There's a lot of uncertainty in the market, and so getting a chance to hear from what's happening in a real world point of view, I think is very productive for entrepreneurs, and understanding, look, there is funding out there. These are human beings writing checks out of their own pocket. They've been entrepreneurs. They've been through the ups and downs, and it's really how you show up in these times is going to determine whether you do get funded or not. And now's not the time to shy away. Now's the time to step up and really understand your core values, understand your core solution, your core problem, be as efficient as you can at delivering it, and then partner where you can to really, scale it and create wealth. So, it's a great opportunity now to be an entrepreneur. There's plenty of challenges out there to get after. And we've seen companies pivoting left and right and generating millions in revenue in a very short amount of time. So certainly a dynamic environment, and encourage the entrepreneurs out there to keep after it. And if we can be of help, please do reach out, and we're happy to do what we can to help move things along.
Great. Well, thank you for coming on the show today, Nathan. Appreciate the comments and looking forward to a follow-up soon. Thank you for joining us today. As always, be sure to leave a review, subscribe to this podcast, and share it with others. Let's go start up something today. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.